Hello and assalamu alaikum everyone. Hope you're doing well. Okay, so today what we have to go through is basically our assurance services. Assurance service is what? Assurance service is basically a service that is provided by an external independent party who is basically doing what? Checking a domain or working on a domain you have given them to. Okay. Now, if you're talking about audit and assurance, it is a type of assurance service that is our main objective to study in this course. But other than that, there are assurance services present in our complete course of actions. In AAA, you're going to see multiple other qualifications, multiple other assurance services where you're going to be focusing on forensic audits. You're going to see some internal audit functions that are going to be presented. There's some other types of audits as well that are present in organizations, such as environmental audit, your sustainability audit, etc., etc. So everything in the organization can be audited, but our main focus will be our assurance services. That is our audit and assurance service provided by an auditor. Mainly, we are going to focus on audit and assurance, but for the sake of knowledge, for the sake of our syllabus, we are going to just get a hint of what other assurance services are. Okay, assurance services are independent professional services that improve quality of information for decision makers. Auditing is a subset of assurance services. Okay. Auditing is a subset of assurance services. Okay. Now, the reason for growth in assurance services, information overload, growth in data availability, changing needs, business needs relevant and unfiltered or filtered information. Globalization, expansion across borders require global ethical governance standards. We have multiple areas. Now, if you are looking at these data that I've just read, if information is increasing, is there a chance of having a misstatement, an error, a fraud in increased information? I give you 5 pages of information. You read it through, you verify it, you check it. It is easier for you to memorize, summarize, understand what it is going through. But I give you 500 pages. When the information increases, there is a chance you might not be able to interpret, understand, memorize, or figure out each and everything. So you need an external person's help to see that what you have understood or what you have read is correct or not. In order to do that, we will be requiring an independent examiner to see that the information that I am getting 500 pages, am I understanding it correctly? Am I reading it correctly? Am I interpreting it correctly or not? So auditors or the function of an assurance service is to provide you assurance that the increased information has what effect on your organization. Plus with that globalization, changing needs, if you are going global, if you're going in multiple countries across the globe, if you are working in Pakistan, like I'm working in Pakistan, and I'm teaching a person in UK, so I have to go through globalization. In every country, there are separate laws and regulations regarding working progress. Every country has some kind of restrictions that they impose. So in order to comply with international regulations, I need to be compliant with local regulations first. If I'm not compliant with ethical and governance standards in the cross-border transactions or cross-border rules, I'm not following them, it is difficult for me to reach out and operate efficiently and for a longer period. So audit or assurance service basically helps us in achieving a standard, in checking whether we are up to the mark or not. If we are to the mark, we can see that we can move to a globalized situation. Then corporate accountability. What does it say? Stakeholders demand reliable and transparent information. Example, ESG reporting. What is it saying? It is saying the corporate accountability. Stakeholders demand reliable and transparent information. Transparent information basically says that you should be basically giving everything at a true and fair picture. If I tell you that we are operating and we are earning a profit of 200,000, so 200,000 should be a true and fair picture of the profit that I have earned, not a fictitious amount, not amount that I am just misrepresenting for a personal agenda. Okay. Then technology. If we are having a advanced technological system, does advanced technology mean a higher end fraudulent system? If a AI tool has been used for some estimations or some calculations, If I am not aware, or if I am not understanding that particular tool, how it works or how will it affect my organization, will I be able to evaluate the possible impact it is going to bring to us? It is not going to. We're not going to be able to identify what the error is, what the problem is, and what effect that it can bring to us. So technological automation, AI systems, and the analytical processes have a very big impact on organization, and it is going to grow. So if you are working in this domain, you need to have a very good grip on some qualifications such as CISA. This is basically known as Certified Information System Auditor. If you are in the technological domain, if you are a system auditor, you want to move into a auditing field, but into the technological part, you should go for this. Technology is advancing. It is increasing the complexity of transactions. It is increasing the complexity of systems, how they're working. So if we are not getting them checked, it is going to be a harmful situation for the organization, as in the end, in the long term, it is going to be a negative impact, a negative sign for the organization. The organization is going to have a massive impact that they didn't know about. So an assurance service provides a help to us. How? If you are having advanced technological systems, the assurance service will provide you, give you an opinion that whether this is operating in a fair and justifiable domain, is it working and giving you outcome that are true and fair and close to reality, or is it deceiving you or creating a difference between the expectation and the reality. Then new business models, outsourcing supply chains and economic raises new assurance needs. Now, if you are outsourcing your work, what does outsourcing mean? Outsourcing means giving your work to others. If you're giving to work your work to others, uh, is it a thing that you will be a little scared about, a little ambiguous about, little nervous about? Why? Because if I am giving you my work, I am telling you that you make my notes. The notes I am teaching, please make my notes. Now, what is the thing that is going to be a question mark here? Are my notes adequate? Am I experienced enough to make notes for you that are going to be equal to the exam and be able to cover the exam topics, subjects? Have my notes been compiled in a way that they're adequate enough for the exam? So first told me that is my documentation correct? Yes. Then you ask me, am I experienced enough? Yes. And am I a qualified ACCA? Yes. So if you are getting an assurance from a third party that the person you are giving your personal work is working adequately and the results they have given are true and fair, don't contain any errors, will you be having more confidence on the other party or the e-commerce methods where you are earning money from or where your work is given to? Will you be having more trust on them? Yes. If I am having more trust on them, then it will be a situation where I will be more confident and more eager to work with other parties. So when we are increasing our outsourcing functions, that is normally seen that we are outsourcing some part of our functions, such as our editing, such as our e-commerce platform, etc., etc. It will impact us. So the impact, the severeness of the impact can be given to you by the assurance service. So assurance service providers gives you the complete picture of the work you are outsourcing or the work that is given to independent parties, so that you are aware of what the outcome will be. Okay. Now, moving on to examples of assurance services. Examples include audit of financial statements, the statutory audit that is a core function that we're going to study in this complete series. So, core function focuses on historical financial data and it will help you in understanding whether the financial statements are prepared in all material aspects, giving you a true and fair picture. Giving you a true and fair picture. Okay. Now, review engagement. Review engagement is basically a lower level of assurance than audit. Okay. Now, why is it that review engagement is a lower level of assurance than audit engagement? Now, please try to get me. I'll give you an example. If you have attempted a test, okay, if you have attempted a test, you go to the teacher, or you have, let's say, done some practice questions, and you go to the teacher, you ask them to please, can you check this whether I have done it correctly or not? What will they do is basically they will review your transcript, they will see and give you an overview that are you working in a good position or are you on the right path or not. Now, if I have done a practice question and if I have done a test, do they have differences? Yes, they have the difference in severity. If I have done my test halfway through and I gave my test to the teacher, I say, just please guide me whether I'm going the right path or not. They skim through it, they check it, they are saying, yes, you're on the right path, but they have not given you the complete verdict because you haven't completed the test. Review basically focuses on an interim financial statements. What are interim financial statements? Interim financial statements are basically the financial statements that are present within the year. Within the year, what does it basically say? Within the year says that you are operating or you are working and you are halfway through the year. That means 6 months financial statements or 3 months financial statements or monthly financial statements. You call the auditor, you ask them to review your work within the year, half yearly reviews. Half yearly audits are basically known as reviews. So you call them, you say that please check my financial statements, please check my controls, please check my work that I have done so that I can work upon it, review it, check them, and update them till the year end. When the complete financial statements are prepared, they should not carry the errors that are found here. So what the auditor does, the auditor basically checks the financial statements, but not substantive testing. Some procedures are looked upon, some transactions are looked upon. Very minimal work is conducted here. Why? Because we have not done the complete work. Because we don't have the complete financial statements. There are going to be things that are ambiguous, and we cannot check them whether they are correct or not. For example, I am standing on 6 months. I have started a contract. Okay, I have started a contract which says that within this year, I have to supply or I have to give certain goods for which I have earned a payment in advance, and I have to recognize it within this year. Now, let's say, according to IFRS 15 revenue, if I'm working, I'll give you an example for this. IFRS 15 says that when you have earned a revenue, record it then only. When you have earned the revenue, whether if the particular goods, it has some conditions, if the particular goods are for a specialized nature, if some other party cannot get benefit from the particular good or service, then you can recognize the revenue. If the other party is receiving the benefit, receive the earnings according to it, etc., etc. But if I say that I have taken a contract of 150,000 and it says that within this year I am going to complete the project. Okay. So should I recognize this 150,000 as a revenue in this year? Yes, I should, if I am completing the project. But since I have completed the project halfway through, I am recognizing 750,000. Okay. Now tell me one thing. If I go to the contract, and say I see the contract, it is for 150,000 or 1.5 million. Let's make it 1.5 million. Okay, 1.5 million. If I made a contract of 1.5 million and I'm seeing I have just recorded the revenue in against of that of 750,000, but I have to complete the project this year, will I be able to make a decisive opinion upon this? No, I won't be, because I have not yet completed the project. The condition of completion of the project has not yet occurred, so I cannot recognize the complete 15,000. The project timing has not yet been over, so I am not sure that whether I will be able to only earn 750,000 or anything higher than that. So I cannot verify, I cannot confirm you that this amount is completely correct or not until unless I reach the 12 months or the contract in to identify that what situation is right now and what is the level of completion. Upon that, I can recognize revenue. So in the review of financial statements, we are not completely done with the year. There are some provisions, some estimates, some amounts that are going to be occurred within this year. So I have to check that whether they are being in a complete position and they are occurring or not, that will be done by the financial statements audit of at the year end, where the complete financial position will be in front of us. In the review engagement, we are going to check only and only whether the position is in a true and fair picture right now, till now, whether I am able to achieve a good understanding of the company or not. In review engagement, you are going to give an opinion basically saying that nothing has come to my attention that is objectifiable or I can object to it or anything that is a problematic area. You're not going to say that, yes, I am sure I have checked maximum areas and I am proven everything is true and fair. I cannot say that. I will only say that nothing has come to my attention till now that is an objectifiable or anything that is a problematic area for me. Okay. Moving on to prospective financial statement information review. Now, what is it saying? It is saying basically when you are analyzing a project, if you have studied finance and management, you might know what NPV is, or FR also. NPV might be a concept you have studied. So, in prospective financial information review, we are basically checking the amounts that we have forecasted or we have predicted for the future. Are they predicted on factual basis, on estimations that are very real or very near to reality, or their assumptions are very vague or very ambiguous, and the assumptions, the factual basis are not correct. I have to check this. Why am I checking this? I am checking this because if I am able to understand the forecast are true and fair, if they are presenting estimate that is very near to reality, it is likely to earn a profit that is near to reality. And if they are ambiguous, they are very optimistic assumptions, they're not going to earn as much as I anticipate. So my investments return will be affected from this. So forecasted or prospective financial information review is a check of forecast and budgets, especially for investors and banks. Now, corporate social responsibility audit reviews environmental, social, and governance policies, ESG reports, where you are basically checking whether the corporate social responsibility that you have claimed is being achieved or not. You're going to review the environmental practices that you're doing, your social activities, and your governance activities. Business ethics audit assurances over code of ethics and ethical practices, whether you are operating in ethical way or not. Now, you might be thinking that ethics is involved in audit. Why are we doing in a statutory audit? Ethics is included. You might have heard that. But why are we doing a business ethics in other terms? Business ethics is basically a separate concept. It refers to the practices done by business in their operations. When you talk about the statutory audit, the ethical components basically affect the auditor. But when we're talking about business ethics, we are basically trying to look at the operational activities of a business, whether they're operating ethically or not. Example, if a business is of timber, so are they replanting any trees when they're cutting some trees? And are they giving an adequate time period for trees to grow when you are cutting off trees? So are you generating replacements or not? This is a basic ethical activity. If you are working in a labor-oriented organization, are you paying the labor the minimum wages? Are you working in a way where you are complying with laws and regulations? Are you paying people overtime? These are basic ethical codes that you have to follow through a business. So this audit basically is a governance check or ethical check of a business in terms of operations. Next, you have risk assessment and internal controls. A risk assessment basically says the kind of risks, the chances of having a fraud, error, or many misrepresentation within the business. So, the risk assessment or internal control audit is basically assurance that checks the effectiveness over risk systems and control systems. Let's say a risk. A risk is risk or I tell you situation. Withdrawing $1 million cash from bank. Now you go to a bank and you withdraw $1 million. Now $1 million is a substantial amount. Yes, you would agree. So if you are withdrawing $1 million from the bank, will it create a sense of risk with you? Yes, the risk can be theft. The main risk here. Now, in order to be preventive of the situation that the money is theft from you or taken away from you, you will apply some controls to mitigate or minimize the risk. That would be have a security guard or an armored car, whatever it is. So in a risk assessment audit or internal control audit, we are basically trying to see that what is the problem, what can be the risk and the chances of this risk occurring within the organization or within our event, and how has the organization applied some controls, some safeguards or some kind of preventive measures through which they can mitigate the risk and minimize the effect of the risk. So these are the things that are basically checked in performance or a risk assessment internal control audit. This assurance can be externally hired as well, and it also is included in our statutory audit, where the objective is different. The objective is that we have to assess a risk in order to decide the extent of work we are going to do on the organization. Okay. So that is the main concept of a statutory audit. But in a separate audit, we are doing it so that we can make the company aware that these are the problems that are going to be faced. But in a statutory audit, we are going to see the level of risk or understand it and check their controls so that we can assess how much work do we have to do in order to achieve a good evidence. Now, in performance of evaluation, performance, and value for money audits, evaluation for efficiency and economic operations, we are going to see what kind of wastage do we have, what kind of problems that we have are in our organization, and how is it going to affect us. How is it going to affect us is basically a component that is how do we mitigate, how do we check whether the problem is going to have a massive impact on us or a small impact. So this is a thing that we want to check with our organization. Okay. If there is a high wastage, that means our cost of producing products is high. If a cost of producing products is higher, then it means that it will be a problematic area for us. Why? Because if we are if we are having a high wastage, the cost is high, we are not going to compete in the market. So the risk of operating, the risk of working capital management is going to be higher. So we have to borrow money, we have to borrow money from external sources, we have to work upon our work capital management so that we are able to do what? We are able to achieve efficiency and compete in the market. So this is an area that is a problematic area for many people. You might have studied this in your performance management exam, where you have to understand the performance of our entity and evaluate their operations. Now moving on to our other areas. Moving on to other areas that involve are elements of assurance engagement. Elements of assurance basically say that there are three people involved in our organizations. There are basically three elements. First is the tri-party relationship or the three-party relationship. It says that there are three people in an organization. First is a practitioner. Practitioner, who is a practitioner basically who has practiced this thing earlier on, that is known as an auditor. The individual providing professional services that will review the subject matter. Subject matter is basically our financial statements. Our subject matter and provide assurance that the audit firm in a statutory audit. Responsible party is the party who was responsible for working and creating the financial statements. So the responsible party, the person responsible for subject matter is the directors and the management for preparing the financial statement to be audited. So please see the layout. The third party, the practitioner, is coming to check the financial statements, basically coming to check the management and their work, so that they can give a report to the party who has hired them, who is the intended user of the audit report. That the class of persons for whom the practitioner prepares the assurance report, example, shareholders in the statutory audit. So the layout is that the intended user normally are shareholders. I'm writing SH for shareholders. Hire the practitioner, that is the auditor, to check the management or responsible party. Okay, responsible party for making the financial statements. So the shareholders hire a practitioner to check the responsible party, basically the management, on the work they have done. So a responsible party is responsible for making the financial statements and operating the company. So the practitioner, the auditor is hired so that they can check the financial statements and their management so that they can give a report to the intended user on what is the current situation. The current situation represents what is the problematic area, is this everything correct or not, what is the situation going on in the organization. Then we have the subject matter. Subject matter says that data such as the financial statements that have been prepared by the responsible party and the practitioner to evaluate. Another example might be cash flow forecast to be reviewed in the practitioner. So subject matter is basically subject that matters. In an audit, what are we basically checking? We are checking the financial statements. So our subject, the main subject of checking is our financial statement. So the subject that matters is our FS. FS are of 5 types. Our income statement, our balance sheet or our SOFP, our cash flow, our changes in equity, and our, sorry, 4, and our disclosures. Subject matter basically represents our financial statements that are to be prepared. And financial statements can be of 5 types, are of 5 types normally. The third criteria is, it is written here as well. Okay. Balance sheet can be also known as our SOFP. Our statement of comprehensive profit and loss statement is SOCI basically, and it is known as income statement or income or loss statement as well, or profit and loss statement as well. Cash flow statement notes are types of financial statements. Now, these financial statements are the subject that are going to be mattering to us, that is going to be checked. Then suitable criteria. Suitable criteria is basically telling us that you should. Suitable criteria says that you should be checking the financial statements according to a criteria set. A criteria that is set by our auditing standards is we have to make the financial statements upon an applicable financial reporting framework. What is an applicable financial reporting framework? Basically, there are two right now that are being operating, that is GAAP or IFRS. In Pakistan, IFRS is used. In UK, IFRS is used. In USA, GAAP is used. So applicable financial reporting framework is to be complied with. Now please clearly, we have to check our subject matter, that are our financial statements, whether they are prepared in accordance with our suitable criteria, that is the IFRS, in order to obtain a review, obtain an opinion, obtain an evidence. The evidence is going to be given to the shareholders so that they can form an understanding of the entity. So I'm going to repeat it. First, the subject matter is checked in accordance with the suitable criteria. The criteria is the IFRS. to get an evidence that whether the financial statements are made, the subject matter is made in accordance with the suitable criteria, so that we can form an opinion and issue a report to the indebted user that the responsible party has obeyed their restrictions, their guidelines, and they have made the subject matter in accordance with the suitable criteria. And we have gathered enough evidence that we can give you an opinion that this is the correct thing to do. Okay, so suitable criteria is GAAP or IFRS. Okay, this can be thought as a rules against the subject matter is evaluated or in order to reach the opinion. In a statutory audit, this would be applicable to reporting frameworks. Then the evidence basically information used by the practitioner in arriving to a conclusion which their opinion is based upon. This must be sufficient and appropriate, and appropriate has two areas, relevant and reliable. So evidence, I'm going to give you an overview, but every topic that we're discussing, please be very clear about that. The things that we are discussing right now just are the overviews. I'm just giving you a taste of what audit is. In the longer run, each of these components are going to be discussed according to their applicable ISAs, their financial treatments. Everything is going to be taught in very much detail. So we need to worry about it. Now, if you're talking about evidence, I move to some evidence for you. Evidence should be safe, sufficient, and appropriate audit evidence. Sufficiency basically says quantity, and appropriateness says quality. Now, obviously, quality is a wider area, wider domain. Okay. It has two segregations. One says reliability, other says relevance. Relevance says the evidence should be relevant to the particular testing area. And reliability says there should be 5 components that should be present in order for us to rely on the audit evidence. The 5 components are written, not oral, original, not a copy, internal controls strong, number 4, directly obtained by the auditor, and third party confirmation. If you have achieved these 5, if all of these 5 are present, then you can say your evidence is reliable. Your evidence is reliable, that means you can rely on it and you will form your opinion based on it. So this is the complete evidence that we need to know. Nothing more is in evidence. But we are going to see each of the components separately when the time comes. Moving on to our assurance report. Assurance report says that the report contains the practitioner's opinion. This is used to intend user financial statements follow the collection of evidence. So what we're saying is the audit report is going to be, or the assurance report is going to give an opinion that based on the evidences that we have collected, everything is true and fair. Okay. So this was a basic overview of our elements of assurance engagement, our types of audit engagements. We'll keep a lecture till here, otherwise it will be extended to a excruciating length and you might not like that. So we'll keep it in here. We'll continue in our next lecture. Till then, enjoy learning. Allah Hafiz.